This is not a drill. This is a dire warning. History is screaming at us, and if we fail to listen, the consequences will be catastrophic. You are standing at the precipice of an economic transformation so profound, it will redefine your life, your wealth, and your future. This could be the stage we're in right now. And if it is, you have approximately 18 months before everything you know about money, savings, and economic stability changes forever. This isn't speculation. It's a chilling historical pattern, repeating with brutal, unforgiving consistency. I'm not trying to scare you. I'm showing you what history proves with brutal consistency. Stage 5, hyperinflation and collapse, is the stage where currency dies. Not slowly, like in Stage 3. Not through government controls, like in Stage 4. But catastrophically, exponentially, unstoppably. This is the stage where prices double every few weeks, then days, then hours. Your salary becomes worthless between payday and the grocery store. Stock markets swing wildly, but become meaningless. Savings evaporate overnight. The middle class is destroyed, and society begins to fracture. In the next 15 minutes, you'll learn exactly what Stage 5 looks like through 4 documented historical examples. You'll see how fast currency actually dies, a velocity that will shock you. We'll uncover what happens to stock markets during hyperinflation and the printing press desperation that accelerates the collapse. You'll witness how governments freeze then unleash money in a final, desperate panic. We'll explore what ordinary citizens experience day to day, the exact timeline from Stage 5 beginning to total reset, and the undeniable signs that tell you Stage 5 has started. This is not financial advice. This is historical pattern recognition, a critical risk mitigation strategy. Everything I'm about to show you is documented, verified, and has happened multiple times across different continents and centuries. If you're watching this video, you're looking for truth. You're going to get it. Let's begin with the fastest hyperinflation ever recorded. Hungary, July 1946. The Hungarian pengo holds the world record for the fastest hyperinflation in history. The numbers are almost incomprehensible, a stark warning of how quickly economic stability can unravel. The daily inflation rate soared to an unimaginable 207%. Prices doubled every 15 hours, meaning your purchasing power was halved before you could even sleep. The highest denomination note reached 100 quintillion pengo, a 1 with 20 zeros, yet it was barely enough to buy a single loaf of bread. Let me make those numbers real for you. If bread cost 1,000 pengo at breakfast, it cost 2,000 pengo at midnight. By breakfast the next day? For 1,000 pengo. By that night? 8,000 pengo. In 1 month, July 1946, prices increased by 41.9 quadrillion %. This wasn't just inflation, it was an economic apocalypse. Hungarian workers were paid multiple times per day, morning, lunch, evening. Not as a bonus, but out of sheer necessity. Money lost half its value every 15 hours, forcing families into a desperate race against time. Wives and children waited at factory gates. The moment wages were handed out, families sprinted to stores to buy anything real, food, clothes, soap, before the money became utterly worthless. What caused this unprecedented collapse? World War II had utterly destroyed Hungary's economy. The government desperately needed to pay for reconstruction, feed its starving population, and maintain a semblance of order. But there was no tax base, no foreign loans, no gold reserves. So they printed. And when that didn't work, they printed more. And when that failed, they printed even more. This wasn't a solution. It was a death spiral, a desperate act that only accelerated the inevitable. The acceleration was terrifyingly swift. From August 1945, when inflation began to rise, to January 1946, when daily price increases became noticeable, the situation deteriorated rapidly. By May 1946, prices were doubling weekly. June saw prices doubling daily, and by July 1946, they were doubling every 15 hours. In August 1946, the pengo was abandoned, replaced by the new forint. From noticeable inflation to the pengo's complete abandonment, 12 months. From daily price doubling to currency death, 8 weeks. That's how fast Stage 5 moves at its peak. Not years, not months, weeks. Hungary's hyperinflation was extreme, but the pattern? That pattern appears in every stage 5, a chilling blueprint for economic ruin. For investors, this highlights the absolute destruction of cash and fixed income assets. For preppers, it underscores the need for tangible, non-perishable assets. For the general public, it's a stark warning about the fragility of paper wealth. Weimar Germany gives us the most documented, most photographed, most studied hyperinflation in history. It's a cautionary tale that every investor, prepper, and citizen must understand. The German mark's exchange rate to the US dollar tells a horrifying story of value destruction. In July 1914, 4.2 marks equaled 1 US dollar. By January 1922, it was 191 marks. July 1922 saw it at 493 marks. January 1923, a staggering 17,972 marks. And by November 1923, it took 4.2 trillion marks to buy 1 US dollar. That's trillion. With AT. German children built towers with bricks of cash because the bills were more plentiful than building blocks. And worth less. Germans wallpapered their homes with currency because wallpaper cost more than banknotes. People burned money in stoves because it was cheaper than buying firewood. This wasn't just economic collapse. It was a complete breakdown of value and common sense. The money-printing desperation reached absurd levels. By 1923, the Reichsbank operated 300 printing presses running 24 hours a day, using 30 paper mills operating continuously, printing 2.5 trillion marks per day. Not to create wealth, but just to print enough physical currency to represent the dying value. This was a government trapped in a vicious cycle, a hyperinflationary death spiral. The government needed money, so it printed currency. The currency lost value, prices rose. The government needed more money, so it printed more currency. The currency lost value faster. This cycle repeated until total collapse. Each round of printing made the problem worse. But stopping meant admitting failure. So they printed more. And the spiral accelerated, dragging the nation into ruin. Here's what's critical to understand about stocks during hyperinflation. German stocks went up in mark terms. A share that cost 1,000 marks in 1922 might cost 10 million marks in 1923. But in real terms, measured in gold or dollars, stocks collapsed. Because the measuring stick itself was disintegrating. People who thought they were preserving wealth in stocks lost everything. This is a vital lesson for investors. Nominal gains in a dying currency are a mirage. The human cost was immense. Pensioners starved. War widows received checks for billions of marks that couldn't buy bread. Anyone on fixed income, teachers, government workers, retirees, was utterly destroyed. The middle class evaporated. Savings that took lifetimes to accumulate became worthless in months. This is the grim reality of hyperinflation, a warning to all who rely on traditional financial instruments. From the beginning of rapid acceleration, early 1923, to complete currency abandonment, November 1923, 18 months. That timeline keeps appearing. Remember it. This is your urgent warning. Zimbabwe's hyperinflation was documented in real time with modern media, giving us unprecedented detail about what Stage 5 actually looks like for ordinary citizens. It's a chilling preview of what could happen anywhere. The progression of the Zimbabwe dollar's denominations is a stark visual of currency death. In 2006, the highest note was $100,000,000. By December 2008, it was $100 trillion, a $100 trillion note that couldn't buy a loaf of bread. This progression, from 100,000 to 100 trillion in 2 years, shows how fast currency dies and how quickly a nation's wealth can be obliterated. The printing acceleration was so extreme that Zimbabwe's Reserve Bank couldn't print fast enough. They ran out of paper. They ran out of ink. They contracted foreign printing companies in Germany and China to print their currency because local capacity was overwhelmed. Think about that. Zimbabwe was importing currency from China because they couldn't print it fast enough domestically. This is the desperate, absurd reality of a government losing control. What citizens actually experienced was a daily struggle for survival. Daily withdrawal limits kept rising because currency kept dying. Citizens spent hours in bank lines daily just to withdraw money that would be worthless by evening. Stores changed prices 3 times daily: morning, afternoon, evening. Merchants couldn't keep up with inflation. Some just closed because pricing became impossible. A robust black market economy emerged as the official exchange rate became meaningless. US dollars and South African rand were preferred. People weighed currency instead of counting it. Gold, fuel, and food became de facto currency. Barter replaced monetary transactions. This is the ultimate risk mitigation for preppers. Self-sufficiency and tangible assets become paramount. The Zimbabwe Stock Exchange became the best-performing stock market in the world in 2008, up over 250 million%. But it was worthless. Stocks priced in dying currency are just dying currency with extra steps. This is a critical lesson for investors. Nominal gains are meaningless when the underlying currency is collapsing. In November 2008, Zimbabwe's monthly inflation reached 79.6 billion%. That means prices doubled every 24.7 hours. From stage 5 beginning to currency abandonment, approximately 18 months. There's that timeline again. This is not a coincidence. It's a pattern, a warning. Venezuela is the most recent hyperinflation, documented in real time on social media by citizens with smartphones. This is happening now, in our interconnected world, offering a chilling glimpse into a potential future. The Venezuelan bolivar's collapse is staggering. In 2016, it was 10 bolivars to $1, black market. By 2019, it was 6 million bolivars. Venezuela removed 14 zeros from their currency through multiple redenominations. Each time, the government claimed it was a solution. Each time, it failed, only accelerating the inevitable collapse. Venezuela printed so much currency, they ran out of security features. Late-stage Bolivar notes had fewer security features than monopoly money because they couldn't afford the technology to print secure currency. The ink and paper cost more than the currency's value. This is the ultimate symbol of a currency's death. Venezuelan citizens documented the horror on their phones. Weighing stacks of cash because counting took too long, stores with one item per person limits, ATMs out of cash for weeks, garbage bags full of money to buy basic goods, children fainting in schools from hunger, hospitals with no medicine, no supplies. This is the daily reality of hyperinflation, a stark warning for the general public. The Maduro diet became a grim reality. Venezuelans lost an average of 24 pounds from 2016 to 2018. Not from choice, but from the inability to afford food due to hyperinflation. This was forced starvation from currency collapse. Over 7 million Venezuelans, approximately 25% of the population, fled the country. The largest migration crisis in Western Hemisphere history. Not from war, not from natural disaster, from currency collapse. This is the ultimate societal breakdown, a critical risk for any nation. Venezuelan stocks went up millions of percent in Bolivar terms. But nobody cared because Bolivars were worthless. The stock market became a sideshow to the real economy of survival, barter, and US dollars. For investors, this is a brutal reminder that nominal gains are a trap. From stage 5 acceleration, 2016, to effective currency abandonment, 2019, approximately 3 years, with the most intense period being 18 to 24 months. The pattern holds. This is an urgent, serious warning. Every stage 5 follows the same terrifying pattern, a blueprint for economic and societal collapse. This is what you must recognize to protect yourself and your family. Phase 1. Accelerating prices, 3 to 6 months. Inflation moves from monthly to weekly to daily. The government still claims it's manageable, but money printing increases dramatically. This is the critical window for investors to reevaluate their portfolios and for preppers to secure essential supplies. Phase 2. Currency death spiral, 6 to 12 months. Prices double daily or faster. Physical currency can't keep up with devaluation. Stock markets become meaningless, and alternative currencies emerge. Savings evaporate, destroying the middle class. This is where risk mitigation becomes a desperate scramble. Phase 3. Abandonment, final months. The official currency is effectively rejected. Dollarization or alternative currency adoption takes hold. The government announces currency reform, always too late. A new currency or foreign currency replaces the dead currency. This is the point of no return. The total timeline, 12 to 24 months from acceleration to abandonment, with 18 months being most common. This is your urgent window for preparedness. In every stage 5, governments try to freeze money movement, capital controls, withdrawal limits, bank holidays. They're trying to slow the collapse. It never works. The pressure builds. Eventually, they have to unleash it, either by removing controls or by printing so much that controls become meaningless. When frozen money gets unleashed in a dying currency, the acceleration becomes exponential, leading to total chaos. If you're in stocks during stage 5 hyperinflation, you have a problem. Your shares might go up 1,000,000% in nominal terms, but you're still losing wealth because the currency is dying faster than prices can rise. This is the stage 5 trap. Everything goes up in number, but down in value. Investors must understand this critical distinction. So the critical question, are we in stage 5 right now? This is an urgent assessment demanding your full attention. Evidence we're not yet in stage 5. Inflation is high, but not doubling weekly/daily. Currency is still widely accepted for transactions. Stock markets are functioning normally, without extreme daily volatility. There's no widespread rejection of currency, and banks are operating normally. These are the last vestiges of stability. Evidence we're in late stage 4 or early stage 5. Money printing on an unprecedented scale, with a 40% increase between 2020 to 2021. Government debt at levels historically associated with currency crisis. Multiple countries already showing stage 5 characteristics: Argentina, Turkey, Lebanon. Inflation persisting despite government claims of transitory. Stock market valuations disconnected from economic reality. These are the flashing red lights, the serious warning signs. Stage 5 warning indicators to watch. Money supply growth exceeding 20% annually. Inflation exceeding 50% annually. Government announcing emergency monetary measures. Stock market daily volatility exceeding 5 to 10%. Black market currency exchanges emerging. Migration increasing from currency concerns. Physical cash shortages appearing. These are the critical indicators that demand your immediate attention. If we're in late stage 4, we have time, possibly 12 to 36 months, before stage 5 acceleration. If we're in early stage 5, we have 18 to 24 months before peak intensity. The history is clear. From the moment you recognize stage 5 has begun, you have 12 to 24 months before currency abandonment or replacement. That's not a lot of time. This is an urgent call to action for economic preparedness and risk mitigation. What does this mean for you? History shows that stage 5 survivors had hard assets: land, gold, commodities, tools. They cultivated multiple streams of income and possessed skills that retain value regardless of currency. They secured international currency access, built strong community networks, and stockpiled physical goods and supplies. This is the prepper's ultimate guide to survival. What enslave people? Cash savings, bonds, pensions, fixed income investments, and trusting government promises. For investors, this is a brutal lesson in portfolio diversification and hedging against currency risk. For the general public, it's a warning against complacency. This is not financial advice. This is historical observation, a serious warning. Stage 5 always ends. The question is, what comes after? Stage 6, the reset. When the old currency dies, a new system must emerge. This is the final, unavoidable phase. In stage 6, you'll learn how new currencies are introduced and who benefits. We'll uncover the massive wealth transfer that happens during a reset, and who wins and who loses in currency replacement. You'll discover how to position yourself before the reset and the profound political and social changes that follow collapse. And finally, the timeline from collapse to stabilization. If stage 5 is the nightmare, stage 6 is the wake-up in a changed world. Some recoveries took years. Some took decades. Some countries still haven't fully recovered. But one thing is certain. The people who understood the pattern and prepared during stage 4 and early stage 5 came out far better than those who trusted the system until collapse. You need to watch stage 6 immediately, not in a week, not when you have time. Now, because if we're in late stage 4 or early stage 5, and the evidence suggests we might be, You have 18 to 24 months before everything changes. 18 months to prepare. 18 months to position yourself. 18 months to understand what's coming and make decisions accordingly. This is not financial advice. I'm not telling you what to do. I'm showing you what has happened repeatedly throughout history. The pattern repeats because human nature doesn't change. Governments make the same decisions. Citizens make the same mistakes. History rhymes. But you don't have to be part of the pattern. Understanding it gives you the power to prepare for it. Click to watch Stage 6 now. Learn what happens during the reset. Understand who survives and thrives when currency dies and is reborn. Because history shows, those who see Stage 5 coming and prepare survive. Those who wait until Stage 5 is obvious suffer. The choice is yours. The clock is ticking. Stage 5 timeline: 12 to 24 months from acceleration to currency death. Most common, 18 months. This is not financial advice. This is historical pattern recognition. Everything in this video is documented and verifiable. The pattern always repeats. Will you be ready?